Yeah,
process.
we chose not to do rare earths. It was, because it's the thing is that the Chinese killed the market for rare earths because they don't care about making money,
They
and they
don't.
flooded the market with rare earths, and nobody can compete at the price they're selling. So that's how they got a monopoly on it. There were a bunch of operations shut down in the U.S. because they just couldn't make any money. So it was a very smart strategy from the Chinese point of view. They're in a different world. They can operate. They can have companies that don't make any money for 10 years. They don't care.
Yeah, I mean that's the thing. I think a lot of the media and the political pundits don't really talk about. And I mean, you can say it's a negative, you could say it's a positive, but at the end of the day, the Chinese, if they want to take control of an industry, the way they do it is they operate at massive losses for long periods of
Yeah,
time,
yeah.
wipe out the competition, and then take the market. That's their strategy.
That's what
Now,
they want to do with EVs too.
yeah, from a Western standpoint, we could look at that and say, "Hey, that's not fair. That's government interference," which is true, no
Yeah.
doubt. But that's your strategy, and you have to, you can argue all you want, but that's exactly what they do. And you could say it's not it's a fair playing field, but it's a reality. All right, Jorge's here. Let me bring him on here. Hi, Jorge. How are you?
Hey Tom, hey Jen, how are you?
Jorge,
Nice to meet you
great
both.
to see you.
Hey, so Jorge, are you calling us from Chile or Canada?
No, from Chile.
Oh, perfect. I want to start with a big question, but tell us a little bit. If you can tell us a little bit about your background, because you spent a lot of time between Canada and Chile. Talk about your early background and how did you get involved in finance?
Well, thank you. First of all, thank you for the opportunity and to be here with you both and with your audience. Well, I started my career in Chile, I would say 2007. I started in the sell side in Lara Vial. It's a leading local broker house, and then expanding to Peru and Colombia. Then joining the buy side in Santander for the UK team. We were three PMs for one for Chile, Peru, and Colombia. That was me. One for Brazil, and one for Mexico. Between the three of us and the team then in London, we built a portfolio for Latin America in Santander. Then I had I had a small pass through for Banco de Chile in the as PM of the local funds. Then I know how to speak Mandarin since many years ago, so I raised my own company with Chinese investors in the region, and it was a boutique firm that I was really enthusiastic about. And I started there my career in emerging markets, and I went to study at MIT in order to scale. That it's a startup, but I ended my MBA at MIT, and the opportunity to lead a new project in Montreal in a very good company, Global Alpha, came through, and I was like, okay, I'll continue my company or I take this opportunity. For me, it was a very good chance. So I decided to go and move to Montreal. I lived there around 3 years, then returned to Chile, and I joined a Canadian company, also Montreal based, as Mount Mary. There since I think the beginning of last year. So yeah, and doing basically the same, managing an emerging markets fund. So most of my time is in Asia. Of course, I cover also Latin America. I'm Chilean, so I know the region here. So basically that's it. Well, in Canada, we had very good conversations with Jen. I remember many opportunities. We had good conversations. So
Jorge, you have a sort of a similar background that I do in the sense that you started with Latin America, then went broader into emerging markets. How did you find that transition from Latin America, to the global emerging markets?
I think it's fantastic because one thing is to understand local dynamics, and you have like a local culture, local bias, and okay, started with Chile, then with Latin America. You think when you're covering Latin America that Brazil and Mexico, big countries, and you think you're covering like the whole universe, right? And then you go abroad, and you find that Latin America is quite small, and it opens your view, it opens your perspective. Really, you enhance in different topics, and you take a different approach. It's not good, bad. It's just different from a local perspective because you can analyze. We'll discuss Chile and we'll discuss Latin America and the whole globe regarding other markets and other experiences, and you see it globally, right? And it's a good complement for a local bias that only sees the local. Sorry.
One of the things that happened to me is when I went global, I realized I didn't have like the kind of expertise I had in Latin America, so I became much more quant oriented. Has that happened to you at all?
Well, I haven't become quant, but for sure, for sure. When I started becoming global around 2018, 2019, of course. I mean, it was the first time that I realized that, well, for example, India, like the first time talking about India was what is this crazy market valuations like? I mean, what is it all about? For sure, for sure, it was a big change or understanding. For example, technology in Taiwan, Korea. I mean, we are not experts in technology. I'm not an AI expert at all, but you have to understand the basics, right? Just the basics, and you have to understand the main drivers. But it's a new world. I mean, here in Chile or in Latin America, well, there are a little bit, but it's very, very few tech-related companies. Domestic demand is important in every country, in every market, but it's not as important than in India. Well, there's also this all this memory craziness regarding DRAM, HBM, driving Korean market, all of those sort of things that you don't see over here. So you have to expand. In the first time, yeah, of course, it was new. But then, well, you started to gain expertise. The other thing is that I travel a lot. I mean, you have to. I mean, you have to be there for obvious reasons. I've traveled before, but just for leisure to Asia. But then I started traveling for work and being there, understanding the culture. It was very, very relevant, and it is until now, of course.
So
So
Latin America's been in the news a lot recently with Venezuela, Argentina. So we'd love to have your views on. Maybe we'll start with Chile because of the big election coming up,
Yeah.
and then if you could give us your view on the Latin American markets.
Yes, of course. Well, in Chile, we let me give you some perspective here. In 2019, let's start in 2019, but before 2019, when Chile recovered a democracy in the 1990s, until 2019, or 30 years, well, Chile was really a boring country, like really nothing like Brazilian way or like Argentina way happened over here. The institution worked. It's a corporate linked country for sure. We had our own problems, of course, but in relation to Latin America, in relation to other emerging countries, Chile was always very stable. And it was a safe place. It was like the central bank was very independent. The institution worked. Like in terms of growth, the country grew a lot, 5, 6, 7% for one decade or more than that. So everything was pretty fine. The market valuations were 16, 17 times price earnings for Latin America, and for emerging markets is quite high, but it was quite well deserved. Then in 2019, there was social unrest over here. If you see, and I go to your question, like here, what gave you like becoming global? If I'm based here in Chile and I see the social unrest we had, it was terrible, terrible because we as Chileans are not used to this, right? Independent on the magnitude, we're not used to such a huge social unrest, sorry, that we had in 2019, and that really changed like a lot of perspectives in the country. But it was one social unrest. I mean, we can discuss them later. But if you go abroad and you go to Indonesia, you go in Thailand, there are different markets, different cultures for sure. But if you talk about a protest or an unrest in Thailand, it would be like, okay, tell me something new, right? I'm not comparing. I mean, it's different things. I'm just sharing a very global perspective here. But this happened in Chile. For a Chilean, it was very, very unusual. Okay, then the pandemic came, and with the pandemic, there was a lot of fiscal spending, of course, for obvious reasons. Then, driven by this constitutional, sorry, but this social unrest, there were two attempts to change the constitution. Changing the constitution here in Chile was like, what are you talking about? Like it was very strange, very strange. So for a local investor, it was like very shaky until 2022, 2023. The market derated a lot. It was significantly. Chile, we used to trade at 16 times price earnings. It went to 6, 7 times forward in 2022. It was like discounting, like the worst of the worst of the worst. The risk was a little bit asymmetric because, like, if things got better, the market had a lot of upside. So after 2022, the local pension funds started buying within the noise. Well, this attempt to change the constitution that came twice got resolved, and finally, the population of Chile voted not to go to any extreme, like not to change anything. And well, there are things, issues, but nothing was changed, right? And after that, the noise was dissipated. So the market re-rated significantly. Local pension funds started buying, and from abroad, things looked not so bad to trade at 6, 7 times price earnings. Chile is still and was still a copper related market. So the external factors weighted much more than the local factors. And then the stock exchange since 2022 until now has doubled. The in US dollars and in local terms, more or less doubled. The CDS of Chile maintains in all-time lows, and the fixed income, the rates have started to lower in Chile. And what happens in the really day-to-day basis, company-wise, the companies are having extraordinary results. The banking sector, for example, we have here Banco de Chile, which is, let's say, a 20 billion US dollar market cap company, quite big for a small market as Chile, is having every year they're earning 1.3 US billion. For Chile is quite a lot. The retailers are performing quite well. So the construction companies, the backlog, the mining investment is very strong currently. That is a little bit different with a local sentiment. Again, going back to your question, Jan, well, local and being global, local sentiment is not good in general regarding. But the point I'm trying to make is that local sentiment is a little bit different with what the market is telling us. Right, people local are very pessimistic with current administration, and everyone wants a change. But what numbers tells us is that the CDS is all-time lows, stock market is all-time highs, current account deficit, it's around 2%. Well, the fiscal debt, the debt against GDP is around 40%, which is considered extremely high in Chile. Remember, I told you Chileans were very conservative, nothing happened. It was like 20% here, like 10, 15 years ago. Well, now it's 40%, but it's in relation to other emerging markets, it doesn't seem so bad. So, well, that's like the big picture, a little bit disconnect between local sentiment and global markets, I would say, regarding what markets think about Chile. And well, moving forward, yeah, we have elections in 3 weeks, 2 weeks, 3 weeks, and according to all the polls, the right wing will win the presidential election, and probably the two chambers. That is mostly in the price. I don't know if the two chambers are in the price, but I think most of it is in the price. So moving forward, I think Chile will regain momentum regarding copper. Basically, the amount of investments that are in place here, around $85 billion for the next decade. That's the highest number since 10 years ago. Right? So again, the sentiment is not very good, but numbers tells us a different thing. Regarding investments, huge investments, especially in mining, in energy also, the companies are doing very well. There is an issue over here that is security. Security is a big concern. That is a change that is in place. I mean, we cannot not recognize that, and that also affects like expectations, right? But well, that's mostly it.
Yeah.
And
And so
well, yeah. Sorry.
yeah, and so what do you if the right wins, what does that mean in terms of changes? What is the probability of social unrest coming back because the right is in power again? How do you see that, or do you see it more as a return to normalcy in Chile?
Well, I think in terms of the market, I think most of it is in the price. Right now, Chile is trading. Remember, I told you we were trading at 6, 7 times price earnings in 2022. Chile is trading around 12 times currently. I think it can re-rate a little bit if the right wins both chambers in the like in the Congress, but mostly should be in the price. Regarding social unrest, I think well, you never know, right? You never know, but it if the far right wins, it could be a chance. You cannot dismiss that, but I think that people are a little bit tired regarding, especially security. Immigration is also an issue, a big issue over here. So people want a little bit of order and growth, and basically like having better salaries, better. I mean, as every country, right? Is the same demands that were there in 2019. I don't think they are in 2025. The society has evolved. There are more social pressures regarding, for example, health, as in every more developed country, right? Well, Chile is not a developed country, but as countries evolve, you start having more pressure regarding health, regarding education, and that is not bad. I mean, at least in my opinion, it's not bad. It's a natural thing of countries that evolve, right? So these things are in place. But leading that to a social unrest, I don't think. I think it will turn a little bit more into normality. And Chile, well, look, before 2019, I would say that external factors matter like 80, 90% in Chile. Honestly, who was in power before 2019 from a market point of view? No, I mean it wasn't really relevant, right? Because it was center right, center left, like, and all the governments were pro growth. And now in 2025, probably the internal factors matter like let's say 30%. But Chile is still a corporate driven market, and it's an export driven market. And if corporate prices remain at historical highs as they are now, Chile will do good and should do good. Maybe internal factors matter more. Sorry, right now, but I really think that still external factors will matter the most.
But Chile had a long period of significant capital flight. Is
Yeah,
that, do you see that capital coming back, or what?
I don't look. It was a quite a divergence between local. As I told you, locals were not used to this. I mean, 2019 social unrest, the pandemic. We had three withdrawals of pension funds, then constitutional reforms, trying to change the constitution 2 times. It was just too much. I mean, if we go to Brazil and we ask that, maybe it's like okay, it's like a little bit more of same issues, but here it was very big, very big. So local investors used to have 100% of most of their wealth in Chile. So they found this and it was like, no, I want to diversify my wealth, which is okay. It's not bad. It's okay. So money from local investors started going out. It was a lot of money, and but it's the international investors started to bring money in. It was a huge divergence between international and domestic investors. I honestly don't think, maybe a little bit, but I honestly don't think that the money that goes out, basically to the US, will come in just because a change in government. In a great extent, no. I think the money that went will stay abroad, but I think at least new money or new like flows will not start going out again.
Do you think institutional investors will start looking at Chile again? I think they, when Tom and I did this, 10, 15, 20 years ago, there was some significant institutional interest in Chile, but that probably dried up nearly completely in recent years. Do you see that coming back?
Well, valuations have gone up, but I think so. I think so. Look, Chile is 0.6% of MSCI. It's a very, very small market. Look, for example, we and in Mamari, I mean, we have one position, right, in Chile, and basically that's it. Well, flows can come back for sure, but Chile will always be a small market, right? I think yes. I mean, I think well, Chile is the main market in the world, so I think it will basically be driven by that. If corporate remains high and mining investments start to execute, and the country grows a little bit more, flows will come for sure.
So both Argentina and Brazil and Mexico too are very much looked at by hedge funds, and they come in and out pretty aggressively.
Yes.
That's not happening in Chile at
No.
all.
No. 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 It's not.
Why?
No.
Why is that? It's why is it not on the radar for the hedge funds?
I think because the main reason for that is as of 2019, for 30 years, Chile was very stable. And it's not a market for hedge funds. It's like you don't go in and out because it's a boring country. It's like corporate drink, like no, but really, it's a boring country. Like it's not. It's not. We have like shaky things like in the last 4 years, 5 years between 2019 until 2022. It's like let's put it like this way: 3 4 years of like excitement, and 25 years of boring country. Like, well, from another perspective, maybe you want to invest in something that like it is a little bit compounded, is steady, is boring, and but it's not a market for hedge funds over here. It's not like Argentina. Look, yesterday was 40% gains in one day. It's like you will not. It will be very difficult to have something like this over here. So I don't see hedge funds in this market being for hedge funds at all.
Well, that's a
Jorge,
good segue for Argentina then. So maybe
yeah,
tell us what you think about Argentina and the other countries.
No, no. Sorry. No, about Argentina for sure, for sure. And the other countries. Well, let's start with Brazil and Mexico, the main markets. I mean, the well regarding Brazil. Well, here we go to adrenalinic things again. But the main drivers of Brazil. Well, in Brazil, you have real rates of 10%. I mean, rates are 15%, and the main driver is rates. I mean, monetary easing. I read some figures yesterday. Well, these figures are from J.P. Morgan to give the correct credit regarding the easing cycle. According to them, the market underestimates the easing cycle for around 300 basis points. That means that if the market is discounting, let's say, 500 basis points of easing, it ends in 800 basis points, right? According to JP Morgan. But the main thing is that the easing cycle should start, according to consensus, in December. And there's a huge room for that. I mean, in Brazil, inflation is more or less controlled. And rates are very high, and real rates are 10%, right? It's similar to Turkey. Right? So, well, that's a main driver for Brazilian equities. There are elections in 2026. A little bit harder to say. Lula said like 2 3 days ago that he will run again. Well, he will be like 81 or 81 or 82. I don't know exactly for in 2026. Well, honestly, it's difficult to say, but I would say that the region overall, we will have Chile, we had Argentina. Well, Bolivia is a very small country. I mean, it's like insignificant for the markets, but the country is a signal for Latin America. Had a change in government to the right wing, also, and that was look somewhat. We can debate about this about President Trump having a little bit shadow in the region. Like the region is turning a little bit to at least not to leftish government overall, but a little bit center right. So that is good. That is good for the markets overall. And also, well, commodities always favor Latin America. So for Brazil, I think at least 1 2 years, should be okay. For Mexico, well, Brazil is trading at 9 times, so it's always a little cheaper market for obvious reasons. But it's a little. Well, I think the macro, and I think that is important in Brazil and also in emerging markets. In Brazil, the allocation, I mean, Brazil represents 4% of emerging market index. 10 years ago, this was a little bit, roughly 6-7%. And 15 years ago, it was around 10%. So it's heavily under-owned still. Foreign investors account for around 51% currently of a Brazilian market. It was higher. It was higher before. I think there is room. 1% of increase, let's say, not until 7%, let's say 4 to 5% of until 6%. It's significant amount of flows for Brazil. That, for example, in emerging markets, I have some figures here that, well, emerging markets also is heavily under-owned. Emerging markets account for around 5% of current AUM. It's still low. And the same, we can have the same discussion regarding how was it 10 years ago, 15 years ago. So, for example, 1% more in emerging markets drive around 400 US billion, which is a lot, of money just in flow, just for a little bit higher allocation to emerging markets. That it reflects in Brazil and of course in all the countries of Latin America. Okay, and well, Mexico. I think it's the monetary easing also is a little bit restrained. It's heavily dependent on US for sure. I heard your podcast, very good podcast with Damien in Mexico with the local dynamics. I think from a market point of view, from an emerging market point of view, not going very deep into Mexico stance, but Mexico has very good bottom-up stories. For example, regarding banks, it's very difficult to find profitable banks in emerging markets. You go to Asia, it's quite difficult. You go to Korean banks are not really profitable. I mean, ROE is low. That's what I'm trying to say. In Korean banks, in Thailand, it's difficult. In China, you never know the intervention of the government. I mean, personally, I don't like to just because of the government issues with SOE banks, and the main banks that have decent ROEs, let's say 15% ish or higher than that, are basically Latin America. And Mexico is a country that really stands out for that. Well, Chile is another market that has profitable banks, but valuation-wise, ROE adjusted, I mean, Mexico has good bottom-up stories. So I think overall, regarding the region, Latin America, regarding this government shift, regarding commodities cycle, is difficult to say we are in a super cycle, but I think we are entering a positive stance regarding commodities, and Latin America is always favored because of that. There is always the argument that, well, Latin America has a discount with the other emerging markets. It has a discount with Asia. I personally don't like that argument because it's always been there. You need something. The discount is always there. If it's 40%, if it's 50%, 30%, well, maybe. I don't know. If the discount can narrow a little bit, maybe. But you need a trigger. It's like when you invest in a cheap company, you need a trigger, right? So I think regarding local dynamics, regarding government shifts, regarding commodities, regarding earnings also, earnings growth are likely to be between 12, 13, between 10, 15%, like steady for Latin America, for Chile, for Brazil, for Mexico. I think that will boost, but the main thing will be flows for the region. If emerging market flows don't increase, it will be difficult that Latin America like outperforms by itself, right? And finally regarding Argentina, well, as we all know, Argentina is not an emerging market right now, but well, I mean, what happened with the election is for me is a little bit a turning point. It was on Friday. I talked with a lot of 3-4 Argentina friends, and it was really unpredictable the outcome. I mean, I didn't hear anyone that predicted this win from the ruling party with 40% of the votes. So it was. I mean, the government has all the the support to tackle this reform agenda and to grow again. I mean, Argentina is a fantastic country. Argentina has everything to grow, to return, hopefully, to the financial markets in 2026. Hopefully, the country will return to emerging markets soon. But we cannot acknowledge, I mean, sorry, we have to acknowledge that there are a lot of challenges also, especially with the FX. I mean, of course, having the support of the US is great, it's fantastic. And well, it's, I mean, I always told my friends, I mean, your president is visiting like President Trump. And I wish really that my president in Chile was with President Trump in that way. I mean, like with that level of support. I mean, it's a huge success. We have good relationship with the US, but I mean that kind of support and of like it's really good.
Jorge, can
Well,
I ask about China? Obviously, you
Of
mentioned a
course.
little bit. You speak Mandarin, which is
Oh,
interesting. You obviously traveled to China. China is the biggest consumption of commodities. They have obviously good relationships with Chile. We understand. I think that for a while they were dumping a lot of EVs in Chile. But can you explain the dynamic, China dynamic in Latin America, but specifically for Chile and Peru, where everyone seems to be focused on Brazil, Mexico, Venezuela, Argentina now, but nobody's talking about Chile, nobody's talking about Peru. But talk about the Chinese influence in your country.
yeah, for sure. Well, we have for Chile. Well, China is the main copper consumer, so we have to maintain good relationships for sure. And we have to also maintain good relationship with the U.S. for obvious reasons, right? China influences Chile. Well, there are a lot of Chinese people here. In terms of what Chinese companies have made, they have made a lot of investments in energy and electricity. Chinese companies control around 60% between. I think the number is 57% of the electricity market in Chile. That's the main investment that they made. State Grid has bought, I think, two companies over here, so they have a huge presence. I would not in that sector. I would not say that China presence is massive. I mean, of course, they are present in mining, in other like sectors of the economy, but still, it's not. I mean, if you see the main investors over in Chile, is still the U.S., is still Canada. China is there, but I think it's around number five, six, something like that. But Chile overall has to maintain good relationships with both countries. China built so no, they not built that. It was they made a strategic partnership in a port in Peru. I would say like 2 years ago, 1 year, 2 years ago, and that is always discussed over here. Like, will Chile like how will Chile react to that? And well, I think both investments are welcome, but we don't have like it's not. I mean, nobody is pressuring Chile to get rid of Chinese investments, something like that, because it's not. Despite like electricity, is not a massive influence.
the Chinese have taken over the Chilean automobile market, have they not?
Well, yeah, I mean, it's not. You know how many brands are over here? I think the last number I heard is like 85 car brands. I mean, we are a small market, right? So it's quite a lot amount. Yeah. So yeah, it's quite it's a lot, right? So Chinese brands, yeah, of course, they are heavily present. I mean, BYD is heavily present over here, but we have brands from all over the world. I mean, Chile is an open market. We see Japanese, Korean, well, some US, a little bit, some well, Chinese cars. So we see cars from all over the world over here. So, in a nutshell, I think the next president of Chile, I don't think there is. I mean, we have to maintain a good stance with both superpowers. Okay, Chile is doing trying to do a free trade agreement with India. They are the first like negotiations for that. I think in 1 year, 2 years, we'll have good news for that. But it's basically in that direction.
Why don't we go on just to your views on the major Asian markets, China, India, from a
Yeah,
institutional investor point of view?
for sure, for sure. It's quite interesting. What has well, China is the most important for obvious reasons. China is 30% for of MSCI, and well, China has. If we go back to November 5th, and we go back to the Liberation Day, and if I told you here, like, you know what, China would be outperforming emerging markets with this level of returns, I mean, I think you both will tell me like you are crazy, right? It's really well, but what really has happened, I think, what has I mean, China is growing 5.2% the last 9 months, and they set a target, as we all know, in the beginning of at the end of last year, to grow around 5%, and they basically do everything to do it, right. So China is growing, driven by external demand since the 2020, a little bit less regarding consumer. They need to, of course, consumer. This is like a two-speed model where exports and manufacturing are doing quite well, and consumers and property are not doing well. Of course, Chinese economy needs to revamp the consumers and the entrepreneurs. I don't think they will do it like right now. And this, I go directly to the market point of view. I don't think they will do it right now because exports are doing okay. Exports are growing 8%, and despite September like dropping like 27%, I think this number with the US, overall it's still 8% growth. So it's still Beijing is still relying on the export market for growing 5%, which is their target, right? In terms of the market point of view, two things have happened: is the weakening dollar. The weakening dollar is good for emerging markets for sure, and is good for China, of course. Internet sector and the healthcare sector have behaved quite well, and also the U.S. economy has been resilient. So if the U.S. economy is resilient, that means export market is still okay. Or the external demand is okay. That's what I'm trying to say. And so both things, and the other thing that is important is that in the last 5 years plan, not in the 15th one, in the 14th one, it was said there that China should rely on self-dependence in technology, and also investment in innovation. So China has done a lot regarding that. Regarding, for example, I have some numbers here regarding R&D. R&D investment increased 48% between 2024 and 2021. It's still small. It's like 2.7% of GDP. You will not grow a country with R&D investment for sure. But China did a lot between 2021 to 2024 with green energy, with EVs, with batteries, and so I think from a market point of view that will continue. Will continue, and that is a little bit independent regarding the U.S. presidency. I think it's a goal set by Chinese party, and that will foster investment in robotics a lot, which is already happening, and in automation, in AI, in semiconductors. That will still drive the market moving forward. Robotics is a very interesting topic that is happening in China that moves the local dynamics, and it's a very interesting sector in order to invest. I mean, it's 65% of the supply chain of robotics in the world is in China. So if you want to look this, and if you want to really get involved, you have to look China for sure. And Chinese, like, it's not just Chinese economy. Overall, is moving through that direction. So what I'm trying to say is that I think that moving forward, you will have different themes. As like 2021 to 2024 was EVs, it was batteries, it was green energy, self-realizing technology that should maintain moving forward. A little bit shift probably to AI, which has happened in 2025. I mean, AI companies have done, I mean, internet companies have done phenomenally well. We'll have robotics, we'll have airplanes for in China, automation that will continue. And regarding the most important thing, which is domestic demand, I think that Beijing here has a cushion because if exports slow down, I think that has to happen before. Beijing will stimulate the economy, will stimulate the economy and will stimulate domestic demand. The amount of savings that that a household have in Beijing, it's just astonishing. I was listening to Andy Rodman. I mean, extraordinary guy that had his podcast here also, and he told us that I think it's 9 trillion US the excess deposit accounts in the last 4 years. I don't think I'm mistaken with the number. I think it's 9 trillion. It's huge amount, double the GDP of Japan. That means that the money, I mean, the money is there. The money is there. It's just you need an injection of, I mean, you need to stimulate the consumer. Need to give them confidence, for sure, for sure. And that if exports slow down, I think the next driver of growth, as it was in the 2010 to 2020, will be with the consumers. And there, sorry, Jen, you were saying? Oh, sorry.
Yeah, no, I wanted to ask you. So several years ago, a lot of foreign institutional investors had basically decided that China was not investable,
Yeah,
and now they're moving back into the market. I think pretty aggressively.
yeah.
What should a foreign institutional investor do in China? What do you see as how should they allocate the capital there? Is it just tech stocks, or you do something
No,
else?
no. I think I think in the consumer space there are many interesting companies. I think you don't need to wait until the government moves into stimulating the consumption. There has been a shift in policy that is quite interesting. For example, the anti-involution campaign that came into in July. I think yeah, it's July of this year. You see, I mean, we are talking in 2021 regarding common prosperity and regulation, and we are talking now the anti-involution campaign. The government wants to focus and is worried about return on investment of the private sector. It's like, I mean, it's not what we were used to, right? And that the government worried about the private, like to not to incentivize competition and. Worried about not to price going down and to companies like to foster the return on investment that has an impact and I think this is the first step of the government focusing on things that matter more not only for the market but also for consumers for the population. I think that if the exports slow down it will regain momentum, the stimulus of the economy, the consumption, the local dynamics. So, in the sense of market, I think there are a lot of consumer stocks that are very interesting. I think the robotic space is very interesting. Also, the automation space, it's astonishing the amount of opportunities that are around there. So between these three topics, robotics, automation, a little bit of internet, but internet has already rallied a lot. So I would say that consumer stocks are starting to look pretty attractive together with robotics.
There is. I guess there was a couple days ago. There was some really positive news. Industrial profits were up over 21%.
Yeah.
So there is signs that the economy is starting to move, but not the consumer, right?
No,
So
no,
of
no, not yet.
industrial profits moving. We're in the beginning stages. The stimulus so far, by the way, they've done a ton of stimulus that hasn't worked at all,
Yeah.
but things may be turning. I don't know.
I think that the first step, you see a shift, at least the tone. I think Xi Jinping is a little bit stubborn here, but I think he's moving slowly in a direction in terms of market friendly policies, a little bit. But I really think, from their perspective, they don't really feel the need. The economy is growing 5.2%. Remember that the goal of China is to double their economy from 2021 as of 2035. That's their main goal, and they are doing it. And they don't. They need to grow, let's say, for 4.5% until 2035 to fulfill the goal. They started in 2021, right? So I think the important thing here is that there are signs that they are ready to shift if the exports plunge or slow down in a material way. That has not happened. That's why I don't think really that they would stimulate the economy like in the end of the year. I don't think they have a pressure for that. But if things get worse in the first half of 2026, they are ready to do it. And there are a lot of consumer stocks to be exposed.
So if China and the US are in a Cold War, as you hear a lot in Washington, who do you think is winning this Cold War right now?
Well, that's a good point, and I think China has a lot of cards. I think I don't want to go deep into like macro things, but I think regarding the soybeans, regarding the airplanes, regarding the rare earth, China has a lot. There's a reason that most probably there will be a deal signed in the APEC in Korea, right? I don't think that the US has all the cards and China is like okay, well, I will accept whatever the US says. I don't think so. I think I remember I was like in the first Trump administration. I think China was really unprepared. Like this tariff war like took everyone like, what do we do here? I think that the country has evolved in terms of, as I told in the beginning, like self-reliance in technology a lot, and the country is much more prepared now. So I think China. I don't think there is a real winner of this, but I think if I could bet who is winning, I think China is taking the lead here.
It does
So
seem that Trump is folding.
Yeah,
He's putting his cards down, and
well,
he'll accept pretty much any deal that Xi gives him.
yeah, seems so.
Yeah, but yeah, yeah. So let's go on to India.
Yeah.
India was everybody's favorite market until it started going down this year.
Absolutely, absolutely. Well, I still remember my last year conversations. I have a lot of Indian friends, and I will always like, as always happens, like locals are more pessimistic than international investors. I don't really know a market where locals are more optimistic in emerging markets than international investors. So when I talk with my Indian friends, I would say in 2021, 2022, 2023, I always said like, okay, give me a market where earnings are growing in a sustainable way, 25, 30% in across the board, not in all sectors, but really across the board. So India deserves a very high multiple. Look, it's 1.4. The math is very simple. 1.4 billion people, 25% EPS growth in a sustainable way across the board. Emerging middle class, like emerging GDP per capita very low, like just doubling the GDP per capita, not doubling, like 50% up GDP per capita. A lot of people across innovation, the possibilities of India were very, very high. What locals told me is, you know what, this will revert to the mean at some point. I don't know when, but current valuations of Indian market are really not sustainable. Look what happened in 2016. Look what we have made in our own history. Like something will happen and something will not converge. India cannot trade at these valuations. It was, I remember, around 23, 24 times earnings in a sustained way for the next 5 years. It just will not happen. And what happened this year? Two things have happened. Earnings have been corrected. Why? I think it's very interesting to analyze the phenomenon that is happening. IT services is the most job generating sector in India, and we are experiencing IT services slowdown. And why is that happening? There is a phenomenon in India with the GCCs, Global Convention Centers. Let's say JP Morgan decide, okay, we don't want to outsource more to India from the US. Let's go and build our own convention center, like our own tech hub in Mumbai or in any city of India, and let's operate from there. And what is happening is that the GCCs, the salary that they offer to Indian talent, young, is 4x what a TCS, Tata Consulting Services, or Infosys can pay. So they are attracting most of the talent. Most of the good talent are going to the GCCs, and India is having. This is a worldwide phenomenon. India is having 50% of the GCCs of the world. They are in India, right? So it's something that is really happening. So what is happening is that talent, the TCS or Infosys or other IT services companies are really lacking a good talent. And also, well, it's not happening right now, but it's a lot of fear regarding automation that can slow down a little bit the requirement of IT services. So you see Infosys is 25% down in the year, TCS is 25% down in the year, other IT services companies also. So that is a main factor that is happening. And that is not only the companies, it's just if IT services go down, it has an impact in consumption, in employment, in every. I mean, it's a very important sector of the economy. So that happened in fiscal year 26. Remember, fiscal year in India go from March to March from the okay. So, but that is so that corrected valuations of corrected earnings of India. So the multiple remain a little bit the same. It's around 20 times right now. So, but for fiscal year 27, I think we could have positive surprises. What has happened in the consumer? In the consumer side, rates have the central bank has lower rates. The GST, the taxes have been lowered. Also, the government is trying to put money into the consumers back again. Right? There's also an important effect regarding gold. As we all know, gold is extremely important for Indian people, and there is a wealth effect. There's a clear wealth effect, and we don't know how long it will take, but the direction of gold has been like very clear. So wealth effect is relevant. It's relevant for an economy that relies a lot in gold. It's a cultural thing, right? So the GST, the lower GST, the lower rates, the wealth effect of gold, a little bit better sentiment has improved a little bit consumer sentiment, consumer sales. There was a famous festival in India called the Dantera, the Diwali festival. It was like a month ago, something like that. And the retail sales in that festival, which is it's like the Golden Week in China, it was the historical highs in across the board, every sector. Of course, it's one date, it's one festivity. We cannot extrapolate and moving forward. I'm just saying that. Also, talking with locals, it's a sign. It's a sign that things, at least, it's a sign that earnings cuts will be more improbable to happen, right, for fiscal year 2027. The infrastructure thesis, the power transmission, the energy investments, all these things are still in place for India. The main thing that has the new thing is IT services. So I think that, and the other thing, well, India has underperformed in a material way. In a material way, who would have thought that in 1 year ago or 2 years ago? Yeah, the big loser. So if you take a little bit more long term approach, let's say mid long term approach, I think the secular thesis is still there in India. It hasn't really changed overall. The opportunities are massive in India. Of course, we need to resolve this trade thing with the US. Well, I think everyone relies on an agreement, a sort of agreement, but India is still a domestic driven economy, a domestic driven market. India needs a domestic market, domestic demand to perform well, and India will do well. So I think, well, you can doubt a little bit. The entry point is a little bit difficult to always to know about, but in terms of mid long term, it could be a good a good thing.
You have to bet between who would outperform between China and India over the next 10 years. Which one would you bet on?
I would say it's a good. I would say you made me think. The next, the next, yeah, it's a tough one because well, the next 10 years, it's yeah. Well, I would say the mid long term. I would say I would say India would. I would say both markets would do a little bit. Would do well. I would say India would do a little bit better than China. But both markets have good fundamentals. To I would say for the next 3 5 years, maybe India could do better than China, considering all the correction that has happened. In the long term, I think both markets have good fundamentals.
Yeah, no, my view is that India will outperform dramatically just because of these structural issues that China has
Yeah, for sure. Well, demography,
in terms of
demography.
demography and all
Yeah,
the
of course.
and also the geopolitics and so forth. So yeah, what would be great would be a nice little correction in India, so you could really pile in,
Yeah. Well,
which is sort of happening. I mean, it's sort of happening. Yeah.
well, it's a small correction, but I think the more important, well, India market is still up, right? But the most important thing is the magnitude of the underperformance in relation to MSCI or to EM, right? That has been really massive. It's around what 25%. The difference between is a lot, right? And other markets that are interesting to analyze. Well, for example, Korea. Korea has been an interesting. Korea market has really performed well during this year, but it's around 70% up in the year. But Korean market is about two stocks: Samsung Electronics and SK Hynix. Both are memory players. Account currently 40% of the market. Samsung Electronics is around 25 26% of the MSCI in Korea, and SK Hynix is around 15 20%. It's quite so. What I mean, there are many things that have happened regarding the new administration that took in place in 2025. There was a stimulus, stimulus announcement of 1.5% of the GDP. There were many things that are being discussed and not settled yet. For example, the inheritance tax in is every time I hear about it, it's really astonishing. The inheritance tax in Korea is 60%. So a company like two generations and the company is gone, right? There were many incentives for the chair boards or the conglomerates, like really keep a little bit valuations low, because the inheritance tax is really high. That's a fact. I mean, it's not hasn't been changed, but it's under discussions, and that's good. It's under discussion at least. Also, the dividend, the tax on the dividend pay companies is also very high. It's 45%. So you see investors going um, to growth stocks, not to dividend pay stocks. That's also a change that is no, it's not a change. It's a discussion. Nothing has been resolved yet. There's also a commercial act. There are some amendments to the commercial act. That is everything is moving in the direction to improve the corporate governance in Korea. That is good for foreign investors, absolutely. I mean, Korea is I mean, it was a cheap market. It was trading at 8 9 10 times. Many people, I remember many discussions. Oh, Korea is cheap. Yeah, it has always been cheap. You need a trigger. You need something. I mean, the markets will not adjust because of anything, right? So these things go in favor of a re-rating of Korean market. And there's other thing that has happened in Korea that is relating to real estate. I mean, real estate have some numbers here around, let's say 5 10 years ago, around 10% of the voting population was a retail investor for the financial market. 10%. Currently, that number has gone up to 35% in the last year. It's between 30 35%. Currently, around 35% of the voting population is a real estate owner. So the politicians really didn't care much about like retail investors in the Korean market 5, 10 years ago. They were too low in relation to the voting population. Now they have to care about. It's very similar to the household owners. The many things that, for example, what is the government trying to do is diverging money from the real estate to the financial market. The debt the household debt is a lot regarding it's around 100% of the GDP. The household debt it was 100% of the GDP in 2022. It was very low in the 2000s. So you cannot foster more for obvious reasons that market. Indeed, there have been some restraints. For example, the government has instructed the financial sector to lend maximum around 450 to 500K to real estate owners. That the average apartment in Seoul is around $1 million. It's a lot. So the LTV is around 50%. So it's a low LTV. I mean, you need a lot of capital to buy a house. So that many measures are being held to foster investments, diverging investments of the real estate to the financial markets. But it's still, I mean, there's a positive things, positive trends that have happened, but it's still a market that is dominated by memory players. And that just went here in Korea. That is, I mean, the cycle is being very, very good. The amount of capex by the hyperscalers in the US, it was 250 billion more or less in 2024. Expectations are around 530 billion for 2027, and the bias of that is to the upside, for sure. It's been double. The number of AI servers, um, around 3 million servers in 2024, 2025. For 2027, around the 7 million servers. Every capex, every investment. I mean, we can discuss regarding if this is sustainable or not, but as until 2027, 2028, the amount of capex investments is massive. It's really massive, and I think, well, memory players, they have their capacity. No one is investing in capacity as of now, and the demand for memory is really going up. So what has happened is that SK Hynix announced, and Samsung Electronic also announced, that impacts Micron in the US also. 30% price in sorry 30% increase in pricing in the memory for the fourth quarter. That's quite significant, quite significant. But as I said, it's a cycle. You cannot forget this, because it's a cycle, and this, okay, it can be very good for the next year, hopefully for 2027. But DRAM prices will correct at some point,
So that's the
for
big
sure.
question: is how long this cycle will go on.
Of
But
course,
hey, I
of
think we
course.
should we should wrap up here.
Perfect.
Yeah,
We've
I want to just
taken a
as
lot of your time.
Yeah, we'll just ask one little quick thing. I mean, obviously, going back to Latin America, one of the problems with places like Chile is just liquidity. And I know you're probably aware of this new stock exchange, which is called NUAM, which is
Yeah.
the combination of Chile, Peru, Colombia. Do you have any opinion on whether this is going to be able to bring capital back to your country and those other? I mean, what do you think the effect of the new NUAM, which starts in January of 2026?
I've heard since 10 years ago, I've heard so many of these initiatives. I honestly lost track of the name. This one is called Newland. But honestly, I've heard that there are so many creative minds over here, and there. I mean, there is no effect, direct effect on liquidity. There hasn't been an effect on liquidity. I really don't think this will foster liquidity. The multiple initiatives have been in place. I think this is a new one, but it's not the first one. So I really don't think so. I think, uh, but Chile, look, Chile trades these. I mean, it's a small market. It is, of course. It's around, I think it's 200 million per day, something like that. Of course, it's much lower than Brazil or Mexico, but it's still decent in terms of liquidity. But this new, I mean, it's good. Always welcome these new initiatives, but I don't think it would be a game changer.
Okay, fair enough. Jorge, thank you so much.
Thank you.
Thank you,
Appreciate it.
Jorge. It was a fantastic discussion. Really enjoyed it.
Yeah,
Thank
very
you.
much so.
Appreciate
Thanks.
it.
Yeah, Jorge.
Thank you.